Now, if you are keen on trimming those banking charges you acquire at every month end, Trade Union Solidarity has recently published its latest banking charges report. It's shedding light on the most expensive and cheapest bank accounts in South Africa. The report is based on charges related to specific transactions. I'm joined now by Monica Maynard, a researcher at Solidarity Research Institute, who will unpack this for us. Monica, good to have you with us. First of all, why do you do this research? This is the 10th year you are conducting this particular type of research. Why?
So, Tony, as you've said, this is our 10th annual bank charges report, and the reason why we do the bank charges report is to give the normal consumers of South Africa a look at what the biggest banks in South Africa, when it comes to transactional volumes, offers them when it comes to transactional accounts. So the only purpose of this report is to have a fantastic look at what the sector offers them and what they can choose from.
Okay, so what were the key findings? Let's talk about, because obviously there's three categories. You have a category of consumers who use their accounts a lot more than others.
So the main finding of the report is that free market competition works, and free market competition drives down the prices for consumers. So what we've seen in this report, and it's actually amazing if you consider that over the past 10 years we've had positive inflation, is that bank costs have lowered in real terms for users over the past 10 years, and this is fantastic, and this is thanks to free market competition. So what we've seen in the lower, the middle and higher middle income categories is that some of the banks have managed to drive low costs even lower for their users this year. And the two banks that managed to lower costs on all their account across all the different income categories were FNB and Capitec. So these two banks offered their users really fantastic value this year.
Okay, which tier is more aware of bank charges? Because some people just, don't worry about bank charges. Are those your heavy users or your mid-tier users?
I think it's safe to say that the low-income users are the most aware of bank costs, because these users are generally entry-level users when it comes to bank accounts. So we also see in the low-income category that banks try to lower costs year after year in this category, and banks tending to low-income users with entry-level bank accounts are very aware of the fact that competition in this category is extremely strict when it comes to bank charges. And another important thing to mention is a thing that the bank charges report doesn't look at is the massive amount of South Africans that go bankless. And these South Africans that go bankless are also a potential market segment for these entry-level bank accounts. So people offering these entry-level bank accounts and also users or potential users of these accounts tend to be more aware of the costs that they need to carry each month.
Now, does any of this change as the banks start to go digital now?
So this is an interesting question, and this also relates to the fact that competition in the free market offers users better value, because what we've seen in the past year especially is that the banking sector is busy changing. So if banks still want to be competitive and stay relevant to users, they need to be able to adapt to the changing banking sector, and this also involves changing the methods that we traditionally know as banking methods. So this year alone we've seen 3 digital banking only digital banks entering the market, and it will be quite interesting to perhaps involve them in next year's report if they are able to stay competitive and offer users excellent value when it comes to transactional accounts.
Those only digital banks, is it more retail or is it wholesale? What are they offering?
So in this year's report we haven't looked at them, but if we are going to take them into account in next year's report, we will also only be taking into account the banks that offer transactional accounts, because that is so that is the thing we are considering in this report, is retail services that they offer, because other services such as credit services or home loans and other facilities that banks also offer is a lot more user specific, but with transactional accounts it's a lot more easy to do a general analysis of the market.
How is Capitec managing to keep their rates so low? across the board?
I think the answer to Capitec's success is, as you've said, they managed to keep their rates extremely low, and I think this is due to two things. I think, firstly, they understand the market they are catering for, because Capitec focuses on this low-income market, so they do understand that these users have quite basic needs, so they understand that they need to cater to those needs as cheap as possible. And the second thing is that Capitec is one of the first banks, even before these only digital banks entered the market. They were able to do this form of banking where we focus a lot more on the digital platform, and it is more a focus on adapting to the changing banking sector amidst the dire economic circumstances we find ourselves in.
Did you notice that maybe a lot more people looking at those bank charges saying, listen, I'm going to maybe migrate to a different bank because of those bank charges? Is that actually happening?
So the thing we do with this report is we don't want to offer financial advice to people. So we don't want to say this bank is the cheapest, you have to move to it now. What we want to do with this report is to inform users. And if users feel that there is another bank that offers the same value and great service that they have at their current bank, but at a greater price, they will move to that bank. But we are not encouraging people to do anything. We just want to inform them so that they can make more informed decisions when it comes to banking.
When you look at your heavy users, are they more worried about what I can also get with my account? Some of the heavy users, the accounts you're being offered this, you have a premier account, it comes with maybe free parking or something free somewhere along the line. Those additional little perks, do they drive people to maybe different banks and pick up different accounts?
Yes, so it's interesting. In our analysis, we look, as we've said, at low income, middle income, and higher middle income users. And what we see, firstly, with low income is they tend to only look at bank costs. But with middle income and higher middle income users, they look at a combination of good bank costs and additional benefits or loyalty programs, especially when it comes to the banks. So with the higher middle income users, we find that these banks are quite comparable when it comes to costs and benefits they offer. So the question then is, what will differentiate one bank from another? And we see with the higher middle income users, it's especially additional services or other services that the bank offers that will make a user choose one bank rather than another. So
loyalty programs?
Yes, loyalty programs with the middle and higher middle, and then as well personal preference when it comes to bank, especially looking at other services they offer the user.
What was the most expensive bank?
So it differs, of course, in the different categories, but when we look at the most expensive bank when it comes to total cost, it will, of course, be one in the higher middle income category. And the most expensive bank was Standard Bank this year.
Okay, yes. That's my bank, by the way. Oh, no.
Well,
okay, just to wrap it up, though, Monica. So at the present moment, customers are basically benefiting now because there's greater choice, and when these new digital banks come into play, like Time, for instance, that really gives us more choice, doesn't it? And that should lower costs in the long run.
Yes. No, of course it should. And this is very encouraging to see that the free market works and that banks also understand what sector they are in and that the sector they are in is very competitive. So this is what we've seen over the past 10 years, and there's no reason that it will stop now, because the 3 new digital banks that entered the market this year is just an example of why the free market works and how users continue to benefit from competition in the market, and we're very excited to see what will happen in the next year.
I know I said lastly, but just one quick one. Physical visits to branches, do they make a difference? Because we're doing a lot less of that now, aren't we?
That is the thing, and that is exactly what I meant when I spoke about adapting to the changing market, because almost all banks now have a digital banking app which users can use, and almost all services that we used to do at a normal branch is now available in digital form. So banks will need to work around this and understand what their users want and then adapt according to this.
Okay, interesting stuff. It's an interesting environment as well. Thank you so much, Monica Maynard from Solidarity, just talking to us about Solidarity's 10th annual report on the state of bank charges in South Africa, looking at the big 5 banks, and you say Capitec came on top with that. Thank you, Monica.
Thank you, Tony.